a buy if we break above this area to continue up or not, or something along those lines. Obviously we want the support to break for sells, but yeah. Oh, look at that. We're breaking the low over here. So one candle breaking the low doesn't really mean we're going to continue moving down, because we need some sort of a consolidation to form, or some sort of a some sort of a price action to indicate that, okay, now is the safe time to go down. Because if we're breaking the low after all this drop over here and we take a sell, there's a very high possibility price can retrace back up. So that's something we will avoid, and that's something like a lot of guys have to avoid as well in the market. So we're waiting to see how this candle is going to close. We're also going to focus on how the 15-minute candle is going to close here as well. Looks like if we start breaking the high on the 15-minute time frame, let's scale fix this over here. Scale fix, and okay, perfect. The 15-minute candle is about to close in about 3 minutes. 3, 2, 1. There we go. 15-minute candle has closed now. This is what we talked about in the presentation, right? You guys remember a presentation that, so we're only going to focus on the scenarios presented in the presentation, right? We had solid candles coming down. If this candle would have closed like a weak bullish candle, then we would have said, okay, if the next price goes bearish, we can take a sell and we can go down, right? But this candle is not closing a weak bullish candle. It's closing a strong bullish candle. So what's the probability there's going to be some sort of a retracement up here? What's the probability that price will just break down, and what's the probability it's going to go up? We have pretty high, over here, pretty high, up. Yeah, it makes sense. Makes sense. Pretty high at this point, right? So this is the point where we can take some sort of a correction move up, because look at the way price fell. We had a huge fall down. So the bigger the move down, the bigger the retracement correcting that move down. So the bigger the retracement correcting that move down. So that's where we're going to anticipate some sort of a price moving up in this 29, 28 pip range, with the stop, somewhere down over here. Maybe have it around, like 17, 20, 18, 17 pips away. So we're going to execute on something that we learned in the presentation. That's all what we're doing at this point, right? We're not looking at 5-minute, 15-minute, 30-minute, 1 hour. We're only executing on what we learned in the presentation. So we're going to go with 1% risk. We're going to go with buy over here. Stop is going to be somewhere below where, like, if we bring the stop below this wick at this point, it's going to be a little bit of a big, actually, it's going to be right here. Stop is going to go down here. Yeah, so probably around, 19, 20 pips over here, so we're going to anticipate price to retrace here a little bit, at least till 1724, 1725. That's going to be a much better idea at this point. Shouldn't we wait for the low wick and break of the high? Again, we're executing on what we've learned in the presentation that we did just 30 minutes ago. That's all what we're doing at this point. And yeah, it seems like it's working perfect. So we're up about 10 pips, 12 pips, 15, 14 pips at this time. So we're going to close partials here. Now remember, our stop loss was almost 18 to 20 pips, right? Stop is 18 to 20 pips. We're securing positions around, like 10 to 14 pips. This does not mean our risk reward is negative. This means that we're starting to secure positions. Whenever we're securing positions, don't let anyone tell you your risk reward is negative, is positive, this and that. No, you're securing positions because you feel like this is the best time to secure positions, right? If price starts moving against you, then we know how to manage risk. So this is a very good opportunity here to secure positions, put stops at break even, and just let the rest run at this point. If we continue up till 1724, I mean, we're reaching that area right now, and if we move on towards, so maybe, I mean, we have like 0.02 lot running here or whatever. Similar type of structure happened during Friday when candles rejected 1797 and strong bearish. Yes, I remember that. So this was the same concept we learned in the presentation, so we executed on that. There's a probability it's going to work. Sometimes the probability is not going to be in our favor. Sometimes that's going to happen. But most times, there's going to be a higher probability that these things will play out. So this candle is about to close over here. Yeah, we're coming up to this rejection area here. So, oh wow, it went way up in that area at this point. 1 hour candle went way up. Didn't really expect it to continue moving like this at all. This candle is about to close, and we're going to see how this candle is going to close over here now. It's about 3 minutes in, 4 minutes in. There we go. Candle has closed just right there. Candle has closed back above the support. This means we're closing back above this area, so this could be like a fake out, but since we're only focusing on what we've learned in the presentation, so from this point, now we're going to move on towards the next New York session. Always remember this: whenever you win a trade or whenever you lose a trade, okay, so when you lose a trade, aim to give your bias a second chance, right? When you win a trade, just call it a day. There's no reason to look at the charts anymore. Just call it a day. So that's what we're going to do over here. We're going to call it a day, and then we're going to move on to the next session at this point right now. So let's forward the candle by 1 hour. With this 1 hour candle closing strong, could we take a buy using the same concept? No, because, your stop is going to be, it's going to be right down over 20, 30 pips, and you can't even have the stop right over here because it's within the range. So if you take a buy, right? So if you take a buy right here, your stop is going to be 27 to 30 pips, even like 23 pips. You can't even have the stop over here because it's in the range. So price can come down to retest this area. So it's going to be pretty difficult. So let's forward this. Buys taken on retracement. Buys was taken on retracement, yeah. Oh, wow. Look the way this 1 hour candle is closing at this point. So this is the perfect scenario where if we break this high, price has the high probability to continue moving up. Oh, it moved almost like 13 pips over here, but really quick. And it came back down. Look, it's only been 8 minutes in this hour. Let's see how this candle closes. Oh, wow. Closing like that. And then came straight down. Oh, moved straight down over here after that. Awesome. Let's move on to the next New York session here. With gold moves, can't we take buys for next candle if it forms a small wick and stops below the current candle and took entry above the previous candle? Yeah, sometimes you can, but not all the time. All right. Let's move on to New York session here. This is London Open, 4 a.m., 5, 6. 6 a.m. Eastern once again. And as we talked about the daily candle, we can see how the daily candle broke below support and continued moving down. Now we're looking at the new daily candle. New daily candle has even a higher probability to continue moving bearish because, we have clean candles down to almost like 100 pips away. So we're moving on to the next day because the more you stick on the same day, the more confused you're going to get the way price is moving. That's what I've found. So for me, it's always better to move on to the next day. So let's take a look on the 4 hour over here. 4 hour has a support down at 16.99, right? We also have a bit of a rejection right over here. This 4 hour candle is closing like a small bearish candle. We don't know whether this 4 hour candle is going to form a support or it will move down. So we need to take a look at the smaller time frames here. Looking at the 1 hour time frame, we're creating a support and we're creating a resistance, right? So we're consolidating over here. So at this point, there's no trade. Now, notice how this candle is closing a weak bullish candle. If the next candle breaks the low, there's a higher probability we can continue. Where? We can continue down, exactly, right? The same thing we learned in the presentation here. So if we break this low, we can continue moving down. Let's take a look on the 30-minute time frame here now. Looking at the 30-minute time frame, 30-minute candle is closing like a bearish candle at this point. We're also creating a resistance right over here. So I think if we do break that low, I think it's going to be a pretty good idea for price to continue moving bearish at this point. So that's something we're going to focus on here. Let's take a look on the 15-minute here as well for a little bit. Yeah, 15-minute is also ranging over here. We have a range happening on the 15-minute time frame, and then we have another resistance right over here. Beautiful. So that's it. That's all we got to wait for here. We need for price to either break above resistance, or we need for price to break below the support to go down. That's it. That's all we need to wait for. Very, very simple analysis. How far can we move down to? Let's take a look over here. I think maybe this support would be nice. 16.99. This is a pretty nice range here. 30-40 pip range. Looks like we're moving up over here to break the high. Okay. We may want to look for buys here above that area. We need to look for sells below this area here. If we move above, this is our range. If we move below, this is our range down at the bottom. 30-minute candle is about to close. Yeah, look at that 30-minute candle. Just quietly, we're waiting now. Yeah, just gonna wait at this point. This candle is about to close. We're coming down. We're slowly about to break the low over here. Things are getting exciting now. We will try to replicate what we learned in the presentation. Oh, look at that 30-minute candle is coming down over here. Do you leave in zones from previous day? No. Every day is a new day, and every zone is a new zone every day. So looking at the 1 hour time frame, wow, look at this. So beautiful. Look at the size of these bullish candles here. So small, right? Small size candles. And if the next 1 hour candle break the low, I think we can take sells for price to continue down. I think that's going to be a pretty good idea. So for that, we're going to use dynamic risk. And the way I'm going to use dynamic risk is going to be, so for people who don't know about dynamic risk, we have a very lengthy section on risk management there. You can take a look at that. It's going to be, may want to enter first position once this candle breaks the low over here, and then add another position once we break the low over here on the 1 hour time frame. That's the idea. But for buys, you would want a candle to close above this area to take buys, because we have rejections here. So waiting for a candle to close, maybe something like this would be much better to take buys and anticipate the next candle to continue moving up. Bullish candles are screaming once we break the low. Yes, they are screaming wildly that we will go down. So let's see here. So slowly, just got to make sure we don't miss it. Because sometimes price moves really quick and we end up missing it. And obviously it's gold. Buy is not valid above that level unless a higher low printed. Yes. Oh, there we go. We've broken the low over here. So we're going to enter our first sell right over here. We're going to go visual mode. We're going to take a sell. Now, since we're breaking the low, right, the stop is going to be above this current candle. This is where the stop is going to be, above this current candle, and we're anticipating price to go down. So what we're going to do is we're going to remove the take profit, because we're going to be securing positions as we continue bearish. Right now, let's look at the 30-minute. We're not looking at the 30-minute. We're anticipating this off of the 1 hour time frame. Right? We're only anticipating this off of the 1 hour time frame. Use the pause trick next to the play button for the added position. Yes, we will. I think this entry was taken in haste. Haste means it was too early. It's still in the zone. Yeah, it's still in the zone. So we took it once we broke the low. Oh, now we're breaking the low of the previous candle here. So this is where we will, actually the 30-minute candle is about to close. Let's just wait for the 30-minute candle to close. There we go. 30-minute candle has closed. 30-minute candle closed with no wick at the bottom. Yeah, I don't know. It closed with no wick at the bottom. I guess we need this next 30-minute candle to wick up and then to break the low to continue down. See, it's wicking up over here. Very nice, very nice. Now it's starting to break the low. This is where we can add the position. It's still in the 1 minute, but it's still fulfilling our condition of wicking up to continue down. We're breaking the low. Looking at the 4-hour time frame, we're coming down, clean range to the left-hand side. Looking at the daily, we have a move down over here. Looking at the, I mean, everything is just pointing down. So we're going to take another sell, put stops above this current candle, take profit. We're going to remove take profit over here. Right over here. Our first position is up 14 pips. So we're going to close partial positions over here, 90%. Stops at break even. And yeah, just let it go at this point. Hey, I'm off. See you later. Oh, thank you, man. See you later on. Beautiful. The power of gold is with you. So let's take a look at our target right here. Okay, let's pause this here a little bit. We're reaching this target 1701, around 1700 here as well. So what we're going to do at this point is maybe you want to secure positions right here a little bit, right? Maybe secure partials on this position here, close 90%, and put stops at break even. Perfect. If we get stopped out, we get stopped out, but our target is right down over here around 1700. Nice one. This is when gold pays you a lot. Our first position is of 40 pips. So let's secure that position. Another one is at 22 pips, so we're going to secure that as well. And one trade, one sell, broke this down on a daily time frame. Went down to the 1 hour time frame, 4 hour time frame. Oh wow, look at, oh damn, it's still moving over here. Dropped like 34 pips after that. Based on that, was it okay to take sell because break the low even in the zone? Yes. I would say it was risky. That's why we used dynamic risk. It was risky. That's why you use dynamic risk. Dynamic risk is when you're taking a smaller position to see if it's going to continue moving or not. Total risk, we were using 1%, 2%. So that's why we broke that trade down into two positions. So we broke that down into two 1% positions. Perfect. Won the trade. This means moving on to the next session. We don't care what happens after that. What are your thoughts on using this kind of trade based on oil? I have no idea about oil. You'll have to take a look at oil and kind of oh wow, went straight up. Why don't take 90%, move stops to 1 to 5 pip profit because last trade left runners? I don't know. I try to secure what I can, and that's about it. I mean, you can leave runners running, that's all up to you, but I just follow my plan, right? My plan is to secure positions, leave runners, and once we approach targets, I just close everything. And we can see price went down further around 70-60 pips and then just went straight back up. So let's move on to the next session over here. Could you have entered buy after the 1 hour candle closed strong bullish? Oh, right over here? Right here? Yeah, you could have, but we weren't looking at the market at that point. This was after London close, so wasn't looking at the market at that point. So this is London Open right here. London Open, 3 a.m., 4, 5, 6. Oh wow, 6 a.m. We moved all the way up over here. Damn, let's remove all analysis here now. We're going to remove all analysis. Let's go towards the 4 hour time frame. Let's remove all analysis on the 4 hour time frame here. This is just straight bullish here now. We're not sure whether price will retrace or what it's going to do, but looking on the 4 hour time frame, we're coming back to this resistance area here. You usually close TP automatically or manually? Manually. Close manually. So daily, oh wow, look at that. So daily rejected this area and it's coming back up to this broken support at this point. So now we got to identify whether we are going to reject this area Or are we going to create some sort of a resistance to do something? And we're also going to take a look at the news. It's a Thursday. We have USD GDP news coming in, so we're going to take and keep an eye on that. Looking at the 30-minute time frame now, let's take a look at the 30-minute. Let's remove all analysis. Okay, so we're coming up to this rejection area to the left-hand side. You can see how previously price rejected this area right here. And we also have a resistance forming right over here. So previously what was happening was we had a resistance here, and then we had a little bit of a rejection right over here as well. So this was a period of consolidation for price. So we're not sure whether price will start rejecting here to move down or whether we will break this high to continue moving up. So you look at price action and look at news. Yes. What can I look at US dollar? Yeah, it's up to you. I don't like to look at any other pair to tell me where gold's going to go. I just focus on gold, and that's all what I focus on. I used to look at, the DXY to see where gold's going to go, and it didn't really help me at all. It just did not actually help me at all. So now I just focus on what I can focus on here, and then I try to take trades based on that. So we're moving up over here. We're not sure whether we will continue moving bullish or we're going to continue moving bearish. So we have to wait for price to kind of show us some sort of a direction, whether we will reject this area or whether we're going to continue breaking up. So let's play this and see what happens. At the bottom, we have some sort of a support down over here, right here. So, yeah. We're just waiting at this point. Let's take a look on the 1 hour. Pretty difficult. $30 minutes also rejecting. So we got a support on the 30-minute, and we got a resistance right over here on the 30-minute and the 1 hour. Look at this rejection here from the left-hand side. This is why price is rejecting right over here as well. So this is a zone we're in, right? If we break above 1724, very high probability for price to continue up. So we're about 4% up so far. So if this 30-minute candle breaks the high of the previous, there we go. See, we're breaking the high of the previous candle, right? So this is where we can execute a buy and anticipate price to moving up at this point, right? The same ideas we learned in the presentation. So this is what we're going to do. We're going to take a buy at this point. We're going to put our TP somewhere up over here. Stop loss is going to be down over here, almost like, 19 pips at this point. Let's remove this trade from here. And now, for managing risk, we're going to keep the 15-minute in mind, right? We're going to keep the 15-minute in mind, because if the 15-minute candle closes, oh, it's coming down over here. Hold on. 15-minute candle is about to close. 15-minute candle has closed. So look at this. 15-minute candle closed below this resistance. When we took this buy when this candle was breaking the high of the previous candle in the anticipation that we can continue moving up, right? But now when we look on the 15-minute time frame, we can see the 15-minute candle has closed below this resistance. So this is the point to close 50% of our position, because it's not moving in our direction. Like, it's not doing what we expected it to do. So we closed out 50% to mitigate risk. I missed the presentation. Will you be putting in the database? Yes. Right? So to mitigate risk, we closed 50%. Looks like it's breaking the high over here. So now we're going to wait for the 30-minute candle to close, because we can't add a position at this point. See this? The 30-minute candle has closed below that resistance. What is the database? Oh, man. Please go read the announcements in Slack. Read the announcements in Slack. Everything to do about the database is in Slack over there. It's going to guide you how to get to the database in Slack. So the candle closed below resistance. So we're going to close 50% more right over here because it's not doing what we expected it to do. So it's good to mitigate risk. So if it moves up from here, it moves up from here. It is what it is, but yeah. Oh, nice. Look at that. We're moving up over here. About 5 pips in profit, 6 pips, 4 pips, 7 pips. Oh, almost 9, 8 pips. Oh, 13 pips over here. Beautiful. So just going to close the entire position here because it didn't really go as we expected it to go. All right. Yeah, so this 1 hour candle moved up. Let's look at the 30-minute candle. 30-minute candle is coming back in the range. So this is what gold is, right? I mean, sometimes it's going to give you those opportunities and then it's going to just come right back in the range. This candle is about to close. And if it closes back in the range, then probably it's not going to go anywhere. Now, since our bias was bullish, right? If we get a candle closing, let's say something like this. Oh, if you get a candle closing something like this, then we can give our trade a second chance. Then we can basically give our bias a second chance for price to continue moving up. So we need a candle to close bullish above that resistance because one candle tried closing above resistance, it couldn't close above resistance, came back in the range. Sell because strong uptrend followed by a bearish candle on a support line without upper wick. No, we can't sell because we're in a range. And if we measure this range, this is not enough range. It's like a 17, 18 pip range, plus we got all these rejections over here. I think good sells are going to be below this support over here. If we break below this area, we have like a 27 to 28 pip range, right? But right now it's just consolidating. The 1 hour candle is also about to close. Let's take a look on the 1 hour candle. Yeah, look at this 1 hour candle. We got a support right here on the 1 hour candle. Our bias is also buys. Always remember, guys, when your bias is buys, just look for buys. Never change bias unless you're really good at giving your bias a second chance. For me in the start, I used to change my biases all the time and I used to compound losses like crazy. Now when my bias is buys and my first buy doesn't work, I'm going to give my bias a second chance. But once you get really, really good, you're going to start to identify the opposite bias slowly. But for the starters, don't change biases. Always look to give your bias a second chance. So for learning purposes, I'm just waiting to give my bias a second chance if we break above 1724. Not looking for sells, only looking for buys. Had the first buys, didn't really work out, and now we're looking for second buys if we break above 1724. So it's a very important thing. Write this down. Never change biases. Always give your bias a second chance, because it happens to a lot. Now, this used to happen to me a lot, and I'm sure it happened to a lot of you guys here too, that if you would take a buy and the buy wouldn't work, and then you would take a sell and you'd get stopped out in sell, and then later on you would see price actually went up. So if you're diligently just watching how to give your trade a second chance, you will always cash that buy up. So we can see right here, this is the, oh wow, we're still ranging over here during NY Open. Just ranger danger. Let's see how this candle closes. This is also going to be closed on the 4 hour candle. 4 hours also at this rejection area over here. Looking at the 1 hour time frame, we're also at that rejection. Let's forward this candle by 1 hour. Oh wow, yeah, nothing's happening at this point. Let's take a look at the next 1 hour candle. Oh, we tried moving up, but came right back down. Yeah, this day is a write-off. Yeah, I'll call this day a write-off here. Look, it's almost 11 a.m. at this point. This is 12 a.m. at this point. Yeah, this day is a write-off. Thursday was a no trade here. We attempted one trade. We managed risk on the 15-minute candles, and that was about it. So let's move on to the next day. Usually, in order to continue in the trend direction, gold does some massive pullbacks. Yeah, that's true. All right. So this is London Open, 4, 5, 6 a.m. Eastern. Weekly candle is rejecting. My voice is about to go now. Daily candle is also back at that support area. You know, we don't know whether it's going to continue moving up or continue moving down. It's a Friday, so we got to be a little bit careful here on a Friday. Let's take a look on the 4 hour. 4 hour. Oh, wow, look at this. 4 hour candle is closing above this area. It's closing above these wicks over here as well, indicating that we may continue moving bullish if we break the high. If we break the high right at this point, you know, there's an opportunity price may move up. We have this rejection over here, and then we have this range to fill at this point. So if we measure this range, this is going to be 20 pip range, and all the way up here 52 pip range for price to move up. So we're going to keep an eye on this on the 1 hour time frame now. Let's take a look on the 1 hour time frame. So looking at the 1 hour time frame, we're approaching this resistance here, which is very, very solid. And if we break above this high at this point, I think there's a very high possibility price can continue moving bullish. Do you guys agree with that? Right? Do you guys can just agree with this, that if this 1 hour candle breaks above this high over here, there's a very high possibility to move up? Yeah, obviously, right? Perfect. It's also a Friday. So it's a Friday, so we're going to go with 3% risk here on a Friday, right? Also, we did presentation too, so I think it should work. 30-minute time frame here also makes sense, right? 30-minute candle, even though it's closing like a small doodly-doo candle over here, bullish candle, but it has a big rejection here to the bottom side as well. You know, looking at the 15-minute time frame here, yeah, 15-minute also, look at these rejections. Even though the candles are closing with small bodies, the rejections, man, they're just giving it away for price to move up. This is just screaming, hey, take a buy when I move up. So that's what we're going to do. When we break that high, we're going to take a buy, and hopefully we will have a winning trade and call it a day on a good note. So yeah, let's see here. We're moving down. The first thing is we need to move down first, right? That's the first scenario. We need to move down to create a bottom wick and then move up. That's what we want to see. But what about the wick in between? We're anticipating volume to continue driving price up. That's gold, you know. So you'll learn that about gold. All right. Oh, we're breaking the high over here, so we're going to take a buy at this point. We're going to take a buy. Our stop is going to be below this candle. Oh, that's a TP. Let's put a TP right here. Our stop is going to be below this candle. Let's put it a little bit below this wick here too, you know, because we got the spread. Except we're going to remove our TP because obviously we're going to start securing positions. So yeah, perfect. Looking at the 30-minute, looks good. Looking at the 15-minute, looks good. Looks good. Looking at the 4 hour, 4 hour candle looks good to go bullish. We've broken the high on the 4 hour candle as well. Yeah, so awesome. If we get stopped out, we're going to give our trade a second chance. There's a wick on the right. Yes, we're basically anticipating volume to continue pushing price through that area. Oh wow, the 30-minute candle is about to close over here. Look at the time, guys. 30-minute candle is about to close. And there we go. 30-minute candle has closed. 30-minute candle has closed bullish. This is where we can add another position to this trade, because overwhelming possibility as daily is going back in the range. We're looking on the 4 hour. 4 hour has broken the high over here. We got these wicks to fill. So now here's the thing. You have to ask yourself, what's the probability the price will just come crashing down? Right? Versus what's the probability price will continue moving up? This is all what you need to ask yourself whenever you're in a trade, right? There are probabilities. What's the probability it's going to continue crashing down versus, right? So perfect. Halim said higher probability to go up. That's all we need to know. And I guess with this, we can add another risk. Let's say this is an example of adding a position. So we add a position here. Stop is going to be below this, TP, whatever. Stop is going to be below this 30-minute candle. And that's it. So we're going to go to trades. We're going to remove this TP here as well. Someone is saying double up, double up. Yeah, I mean, it just makes sense. It just makes perfect sense for the 1 hour to continue bullish and the 30-minute to continue up to without breaking this previous low. This is what we talked about in the presentation as well. The 1 hour candle is about to close. We got to wait for the 30-minute candle to close over here. Oh, we're coming down. We should respect the 30-minute low over here. This is what we need to do. We need to respect this low, and we need to continue moving bullish. Yeah, this candle is about to close in about 3-4 minutes. So the main idea is to wait for candles to close. Right? Awesome. 30-minute candle closed bullish. Looking at the 1 hour candle. 1 hour candle also closing bullish. Just so nice. Look to the left-hand side. We're coming up to fill these wicks. These wicks don't mean rejection. Once we're closing above this range, these wicks, they become wick fills. You know, wicks are always filled when price is in momentum. So these wicks will get filled. That's all we want at this point. I'm not securing positions. It's a Friday. We're letting them run. Actually, you know what? Let's just secure this one right over here. One position right here. We're going to close this at 10 pips. We're going to secure 90% at 10 pips over here. And then the other one, we're going to secure as well. I've seen some of your trades go 40, 50 pips. Yeah, I think this is the trade which will go 40, 50 pips because we're closing above this strong zone here. Look, previously 1 hour candles, they tried breaking above, they couldn't break above. And now we've broken above, you know, and when it's gold, this is how gold ran on Friday. This is exactly how gold ran on Friday. Just kept running and running and running. And this is going to be that trade where it goes into 30, 40 pips. So our bigger position is around, 17, 18, 20 pips up over here. So we're going to secure 90% here, 90% secured right here. Going to put stops at break even on everything. And we're going to leave it running at this point. So we're going to forward it by 1 hour. Boom, straight up, right? So this is where price just continues moving on gold. We're about 30 pips over here. Let's forward this by 1 more hour. Let's take a look on the 4 hour time frame. Look at this. 4 hour has this range to fill at like 1731. Let's forward it by 1 more hour here. Straight up. See, we tapped into that zone over there. Beautiful. About 30 pips, 40 pips. Amazing. So let's secure all this over here. Perfect. Can you share with us the trades where you have so much confidence you don't even secure any? Yeah, we just, at that point, I just leave them running, just like right here. I just left them running here, So if I was watching the market, I would have secured position at this time. 2 positions on 1 trade is still considered 1 trade. Yes, it's still considered 1 trade. But hey guys, I'm going to head off over here. I'm fasting. My throat is getting really dry over here, so I'm going to take some rest. Thank you everyone for coming on. This is going to be in the database in about 4 to 5 hours. So just be patient. It's going to be there. I will announce it when it's uploaded. So please don't ask.